Now, no doubt you came to Portfolio123 because you wanted to design some powerful strategies with Edge. However, it can be very overwhelming at first. I know, I've been using it for 12 years and I still probably have only used about half the website. So I wanted to design this quick tutorial to get you up and running as soon as possible. But now before you start designing anything, I want you to have all the factors and formulas at a quick reference here. So I want you to open up another window. I want you to go to Resources. Under Reference, you'll see Factor Reference. Open that up and just keep that handy at all times. You can search for the actual factor you want, price to sales, or you can just scroll through, ratio and statistics, valuation. You can find what you want. And what I particularly like about this is oftentimes, let's just find one here. Accumulation, shake and money flow. You click on full description, they'll give you more information inside. And what they'll often give you is a way that you can use it. They'll just give you sort of a copy and paste formula that you can use. And then you can change the variables yourself once you're inside the actual screeder or simulator. So that's just a kind of an easy little shortcut tip. But for now, I'm going to take this off the screen, but just leave it open whenever you're running Portfolio123. You'll use that a lot. Now, the heart of every strategy is a factor ranking system. The factor ranking system is essentially the engine. Now, you're going to click on Research and you're going to click on Ranking. And we're going to be looking at the Portfolio123 ranking systems. Now, eventually you're going to want to design your own ranking systems, but for now, why not just use the pre-built ranking systems? A lot of expert investors have built these and you can use them and it'll be a shortcut to building your own system. So inside Core Investing Styles, click on Core Combination. Now here you can see they have these different styles. I'll just expand it for you. Growth, you can see they break it down into earnings, sales, operating income, acceleration. They have low volatility. I'm just going to close this here. Sentiment, momentum, quality, and value. You're not going to be able to change anything whenever it's still as the Portfolio123 core combination system. You have to save it as something else. So let's just save it as tutorial. All right, I've renamed the ranking system tutorial, and now I can go ahead and modify it as I see fit. So what do I want to do with the ranking system? What I like about this is you can just pick basic styles. Like for example, if I want to go value momentum, that's a very common type of ranking system or a style of investing. So I head over here, I click on weights. I'm just going to zero everything out first. And then I'm going to put a 1 in the value and 1 in the momentum. Click update. This little button up here is save. And it just defaults to 50% momentum, 50% value. So we've got our value and momentum. The next thing that we're going to want to do is we're going to want to just actually test it out to see if this ranking system produces outperformance. So we're going to click on the performance button. This is a factor back test. Now, we're set up since 1999 until today. That's fine. We're going to rebalance and reconstitute every 4 weeks. That's fine. Let's try it out on the S&P 500 to start. With the benchmark S&P 500, we're going to make 10 buckets. So what this is going to do is it's going to take our value momentum ranking system. It's going to separate it into 10 buckets or 50 stocks per sub portfolio from low rank to high rank. It's going to run it across all the stocks in the S&P 500 since 1999, and it's going to see whether we get outperformance the higher the value momentum ranking we have. I hope that made sense. Okay, minimum price. This is a liquidity sort of a thing, and we don't need it because we're into super liquid stocks. So let's have a little look. Okay, so it does work. You can see this is the S&P 500. It has an average of 7.2% annual return since 1999. The lowest ranked value momentum portfolio had 4.7% 8% annual return, and the highest was 11.2, but we're not really seeing a massive difference. I mean, that's decent for the S&P 500, but let's see if we can do a little bit better. Whoops, let's go back to performance. Let's instead run it on small caps, the Russell 2000. I think that it'll work better there. We'll use the Russell 2000 benchmark. Okay, let's run the exact same value momentum ranking system. Okay, that's a bit more like it. So the lowest ranked stocks have a negative 3.3% annual return, and the highest ranked stocks have an 18.1% return. So far, we're off and running. But what this doesn't tell us, it just tells us the annual return. It doesn't tell us how volatile the strategy is. We don't know. I mean, maybe it goes up 50% one year and it crashes down 30% the next. We don't know. So the next thing you're going to want to do, you're going to want to head over to the screener. The screener is like a simple screening backtesting tool. Okay, so we're going to want to change it to the universe, to the Russell 2000. We'll just look at our settings here. Our ranking system, we're going to want to select tutorial. That's our value momentum ranking system. We are going to want to select, let's just say the top, I don't know, well, 20 stocks, let's say. Okay, there's no hedge. Now in the backtest settings, I'm going to take out slippage, and I tell you why. Because every 4 weeks, this is going to dump the portfolio and try to reconstitute it. And that's not the way that we're actually going to trade this in the end. At this point, we're just wanting to see the top 20 stocks. What does the performance look like? Is it volatile? Is it consistent? Are the returns lumpy? Like maybe we get all the returns in 1999 and nothing since. So let's go ahead and run the backtest. Okay. So for the top 20 stocks, we've got an annualized return of 24.38%. Our drawdown is a bit more than, well, it's the S&P 500 I have here. Let's just go ahead and change that to the cap-weighted Russell 2000. So it's still probably going to be a little bit more drawdown. Okay. Sharp ratio 0.94. And if you look, this is the turnover. And if you just scroll here, this is the turnover every 4 weeks. Scroll to the bottom. So on average, it's turning over 38% of the portfolio every 4 weeks. Now, there's a couple other things that you can add in at this point. And these can be things that you already maybe have strong convictions about, research that you've already done. For example, maybe you don't like high short interest stocks. SI percent float, let's say less than 10%. Now, something that I always like to have when it's free cash flow, or gave it away, when it's dealing with microcaps and small caps, is I like positive free cash flow. It's just something that I like. So free cash flow over the trailing 12 months is positive, and free cash flow quarterly. You're noticing that as I'm typing it in, you can actually type in the words free, well, that doesn't work, free cash flow, and the menu will just pop up. You can select it that way as well. You can use the reference that I talked about earlier. Okay, so we have those two items. And let's go ahead and run our screen again. Okay, so let's just say that we like this system. We're getting about 29% gross returns. You know, I mean, there are periods where it's definitely not working the best, but let's just say we're happy with that. So what is the next step? Well, the next step is we're going to want to under Research, Simulated Strategies. This is where, and new simulated strategy for stock, and we're going to call this tutorial simulation. Now again, I'm just going to take out, just for now, any commissions. I'm going to take out the slippage. I'm going to make the price for transactions at the next close. We can fiddle with this later, but the reason I don't like it at the beginning is maybe you find some excellent source of alpha, some huge amount of outperformance, but it's also high turnover. You can find ways of lowering turnover and retaining more of that return. But if you just have the slippage in from the word go, you might not realize it. You think, well, that formula or that factor just totally stinks and it killed the returns, when in actuality, maybe it can actually boost returns by 5 or 10% once you adjust for the high turnover. So I just like to leave it off for now and then put it back later. Starting capital 100,000. Long. Everything looks good there. Under rebalance, 20 stocks, that's fine. Static weight. I'm going to change this to rebalancing every week. We can lower the turnover, but I just like to monitor my portfolio every week. Allow immediate buyback? Yes. Okay. We'll let it drift 50% before it starts actually rebalancing positions. Universe, we are using the Russell 2000. Benchmark. Now there's a lot of settings here. I'm not going to get into a lot of them because I want to get you up and running as quickly as possible. We're going to use our tutorial rank. Now for these formulas, what I'm going to do is I'm going to go back to my rules in the screener. I'm going to click on text editor and I'm just going to copy them, and then in my simulation I'm going to click text editor and I'm just going to paste them. So we just get our rules put in like that. Okay, now in cell I'm just going to put in the number 1, which just means, it's sort of like the screener, every week it's going to try to dump the stocks, all of them, and then pick the 20 that are always the highest ranked according to value momentum. We're going to change that later, but I just want to run it this way at first. Okay, period and restrictions. Let's run it all the way back to 99. Whoops, there's something that I did here that I should have turned off. And what that setting is save transaction. Saving all the transaction is good if you want to pick through the individual trades and look at them in more detail, but it really slows down the simulator. So as soon as this is done, I'm going to say don't save the transactions while we're in the testing phase. All right. So that's pretty much what we had when we ran it in the screener back test. 29% return. Looks like our drawdown is a little bit less, but I'll show you. We'll click rerun. General, where our transactions save, no. All right. So at this point, something people like to do is to exclude certain sectors or industry groups. Now it uses RBICS. I don't know if that's pronounced RBICS or just RBICS. I have no idea, but we're going to add that in. Now, if you click again here, full description, I can go through and I can see what the code is for each of the sectors, subsectors, industry groups, and sub-industry groups. So I can go through and let's just say that I want to remove, I don't know, precious metal stocks. So that will be 45, 15, and 25. Metal or mining, precious metal mining. So I could just copy this. I could put it in here. And I could say equals false. And now it will not buy any precious metal stocks. So you can do that for any sector, industry group. Just put a comma. Like maybe you don't want utilities as well. and then you can go ahead and rerun the simulator. Now you'll see it's actually going to run quite a bit faster. There we go. It didn't make a big difference because it's probably not picking those up. But anyway, we're going to leave no utilities and no gold stocks in there. Now, I said we could lower turnover, and we do that by taking out the sell rule. We don't just want to dump it no matter what. We want to perhaps buy stocks that are in the top rank better than 98%. So this is the Russell 2000. So that means 40 stocks. If it's in the top 2%, there's 40 stocks that it will allow. And then we'll say if it's less than rank 97, then go ahead and sell. Okay, so that did lower turnover by a lot. It also lowered our return. There might be something else you want to do here, like perhaps if the free cash flow quarterly, if it ever goes negative, sell the stock. Okay, so that added actually a few percent per year return, and it didn't boost our annual turnover that much. There's all kinds of things that you can do for sell side rules, like maybe you want to say gain percent. So what this means is the percent return of the position since it went in your portfolio minus the benchmark, bench percent. So if a position, say, dropped 10% and the market went up 10%, that's a difference of 20%. So let's just add something like that in. If ever we're losing against the market by more than 20%, trigger a sell, and then it will relook, it'll sell that position, and then it'll run it through all of these buy rules again. So there's all kinds of little things like that you can do. As well, I just want to highlight, you can also use, instead of rank, a lot of people like using rank position. So you can say instead 40. So it's got to be in the top 40 stocks. And instead of rank, if it's greater than, say, in the 50th position, then we sell. That gives you a little bit more control over the exact position before it sells. Okay, so we've got a fairly decent basic strategy to work with. There's a lot more that we could do with this, but at least that gets you up and running. And remember, you can also go back into your ranking system, research ranking. I want to find the one called tutorial. Oops. Show me all of my ranking systems. Tutorial. Because maybe you want to change something. Like maybe you want to say, well, I want to try 60% momentum and just 40% value. I want to weight it a little more heavily towards momentum. And then just go ahead and try that. See if that makes much of a difference. Okay, so that did have, it looks like a fairly positive effect, but maybe you're like, no, I'm actually mostly a value investor and I want just a little bit of momentum. So 70% value, 30% momentum. Go ahead and try that. All right, so there we have the results. Now, when you get it to where you sort of like it, you're going to want to click on the gear wheel. Now you can save this as a new live strategy. So what that will do is you'll make a completely new live strategy. The inception date will be today. So you just go through, I mean, you can click automatic if you just want to automatically run on autopilot, paper trading this for you. You can put all your settings in when you're ready. You hit review, get recommendations, and it's going to construct the portfolio for you. Okay, I'm just going to back out because I don't want to do that. What I want to do, just for this example, is you can also say convert to a live strategy. Now what this will do is it'll take the existing portfolio with all the history and just, oh wait, I've got to save transaction, so I'm going to have to rerun it. Silly me. Now we're going to have to save all the transactions. And what it's going to do is it's going to actually just convert that with its equity curve and with all of the history into a live running strategy as if it had all that history already factored into it. Okay, so here, convert to live strategy. Boom. Now it's in your research live strategy section. You'll find it. And there we go. And it will just continue to give you your stock picks on the rebalance period, which is every week. Now, before we go, I just want to show you one more thing. I want to go to simulated strategies. I want to show you one of my favorite little strategies here. We're going to call this simulation microcaps. Okay, I'm not going to put again any slippage or commissions here. You can do that later. Next, close. Don't save the transaction. We're just going to go for 10 stocks every week. Allow buyback. Going kind of quick here. I'm going to want to select, just show us all listed stocks. That's everything, even stuff with no fundamental data. The benchmark. Okay, and the ranking system I want to show you. I really like Yuval Taylor. He is a Portfolio123 user and he is amazing. I'm not exactly sure on the final numbers, but something like 45% annual return over the last 7 years. Like it's incredible. And he's got a free ebook, which I should link to in the comment section. Now, you'll find a system, and he built this small and micro cap focus. Now, his methodology is completely different than mine, but I have nothing but respect for the man, and his ranking system is fantastic. And you have access to this whenever you get a decent subscription level at Portfolio123. So the first thing we're going to want to do is market cap less than 500 million. We're going to want some liquidity filters. Average daily total over the last 20 days greater than 100,000. And the close, let's say greater than $1. Free cash flow quarterly greater than 0. Free cash flow trailing 12 months greater than 0. Let's add another line. What are you doing here? Oh, here we go. Okay, short interest. I want really low short interest when I'm dealing with the microcaps. Okay, so we have that. We have 10 stocks, just making sure. And for this one, I'm actually just going to make it where it just, every single week, it just tries to find us the best stocks. Okay, I think I've got everything here. And I'm only going to run this maybe for the last 5 years because it's probably going to take a little bit more time than some of the other systems because there's a lot of factors in it. So there you have it. Now, of course, you might want to play with this a little bit more, lower the turnover. There's all kinds of things you can do, but this is an incredible ranking system when you're dealing with microcap stocks. And Yuval Taylor, thank you. He just made it available to everyone on Portfolio123. So that's the quick tutorial. I hope that gets you up and running, at least playing around designing strategies sooner than later.